Hello and welcome to today's WIEF Power Talk webinar on diving into the deep blue possibilities for Islamic Fintech. Now, ladies and gentlemen, let me first introduce our moderator for today. She is the Managing Editor and Director of Islamic Finance News, IFN, and IFN Fintech, the industry's first news service dedicated to fintech for Islamic finance. She specializes in ethical and Islamic finance as well as fintech reporting and analysis, covering regions including the Middle East, Asia, Africa, and Europe. Trained in journalism and sociology, she holds an Islamic finance qualification from the Chartered Institute for Securities and Investments in the United Kingdom. Now, without further ado, I welcome our moderator, Vinita Tan.
Thank you so much, Ina, and good morning, good afternoon, and good evening, wherever our delegates may be. My name is Vinita Tan, the Managing Editor and a Director with Red Money Group, the parent company of Islamic Finance News. I must say it is indeed my pleasure to be moderating today's webinar. So before I introduce our distinguished panel, I am indeed very excited for our topic today, which is diving into the deep blue possibilities of Islamic fintech. There is a lot of talk, and rightly so, on how Islamic finance can support the planet and people, and the discussion have mainly revolved around the green economies. So today's topic on blue economies is indeed an interesting one. To help us navigate today's topic, the WIEF has put together a fantastic panel of international experts. We have Angelique joining us from Seychelles, which is the first sovereign to have issued a blue bond. A trained lawyer, Angelique is the CEO of Seychelles Conservation and Climate Adaptation Trust. From Malaysia, we have Ramesh Khanna, the chairperson of the UN Global Compact Network of Malaysia and Brunei. Ramesh is heavily involved in sustainability and Islamic finance causes. I'm also very pleased to also be welcoming Stella from the UK. Now, Stella is the Managing Director of DDCAP Group and sits on various Islamic finance, Islamic fintech, and sustainability task force. Last but not least, we have Kamal, who is joining us from Oman. Kamal is an advisor to the Capital Market Authority of Oman, who has also worked on building the Islamic finance regulatory architecture for the Sultanate and will be providing us with a GCC perspective. As the MC has very kindly mentioned earlier, I really like to encourage everyone to ask questions. This is a webinar and we're all here to learn from the experts as well as each other. So do post your questions in the Q&A tab and we will endeavor to address any queries you may have. So to begin our discussion, I would like to have our panelists to help us set the context for us by giving us their observations and general input about blue finance, and also how Islamic finance and Islamic fintech fit into this narrative. So a very brief observation from each panelist. Angelique, perhaps I could start with you first.
Thank you very much for the invitation, and thanks for the organizers for putting this together. I apologize if there's a bit of noise. I'm in a noisy place. So just some observations as it relates to the blue economy. Seychelles is one of the first countries to have issued a sovereign blue bond, following the journey on starting with the debt swap. And here really to show how can essentially impact finance and social finance be supportive to develop, to ensure that the development and economy is also based on a healthy ocean and healthy marine ecosystems. While Seychelles has been leading in this role, it still has a lot to learn as it relates to fintech and Islamic fintech. And as such, at this point in time, we're very much, apologies for the noise.
No problem. Thank you so much, Angelique. Ramesh, can I pass the floor to you?
Thank you, Vinita. Thank you, Angelique. The blue economy is a term that, in my mind, finally directs the mind to focus more directly and clearly on this subset of the environment. It's a very large subset and one that needs to be considered alongside land and climate-based environmental issues. So the term blue economy in itself, however, suffers from a lack of definition, and I'm confident that we will cover some issues on definition later today, but that is the reality. Applying Sharia principles to something that is unclear can become even more challenging, ladies and gentlemen. The intention is good. The execution is where the challenge lies. Ultimately, the aim of Blue Sukuks is to raise capital. Capital flows to where there's certainty, and the lack thereof creates a risk premium. Risk attracts, in my mind, different shades of capital, not all of which will work for the blue economy. Ladies and gentlemen, I sit on both sides of the divide. I run a PE firm that is both Sharia compliant and ESG focused. On that score, it's easy because ESG basically takes after what is in the good book anyway. That's easy. I value the oceans and seas and our blue economy, but it is difficult, and I'm being real here, it is difficult to find a blue investment which allows me to give my investors the returns I promised them over a specific time frame. So how do I say, thanks for entrusting your money with me, but I haven't earned you my targeted returns, but I have saved an ocean, and I have saved lives, and I have saved livelihoods. It doesn't work, unfortunately. But I do have confidence in this space, and I do believe it will grow in importance, and I do believe there are solutions. But I just wanted to put this out there because I think a bit of reality is always good, and hopefully it will temper our discussions a bit. So thanks, Benita.
Thank you, Ramesh, for that reality check. Stella, could I get you?
Thank you, Vanita. Thank you, colleagues, and thank you very much for having me today. I think I'll just start by thinking back to the closing of the recent 26th United Nations Climate Change Conference. And as it drew to a close in mid-November, the UN Secretary General warned us that our fragile planet is actually hanging by a thread. We're still knocking on the door of climate catastrophe. And whilst the Glasgow Climate Pact took us some steps forward, it was also noted by him that there's still much to be achieved, adding that global leaders didn't achieve all of the goals for COP26, and there are still some building blocks, though, that we can take positive sentiment from because we're making progress. Now, amongst the building blocks were the commitments that were made by the financial services sector, and on day 3 of COP, the first ever Finance Day took place. And the level of engagement by the financial sector hadn't been seen before. And it led to the event being dubbed the Finance COP by some. And key themes on the day and after advanced the notion actually of financing a just transition to achieve ultimate related goals. So it sort of shifted the focus a little bit. Amongst these, broadening focus to encompass innovation of financial solutions for a lower carbon future without causing severe economic impact, especially for the developing world. And mobilising funding to limit climate change whilst promoting the shift to a lower carbon future in a way that's sustainable and positive for all of our communities. So, in my opinion, it presents a very unique opportunity for the Islamic financial marketplace and also for those economies and also the communities within its geography that are disproportionately vulnerable to climate change and also that are significantly impacted by decarbonisation. So, referencing the main principles of the Sharia, which aim to reduce poverty and inequality as well as achieve sustainable and inclusive development. In the recent past, our industry sector has actually shaped a reasonable response that has enabled us to begin to contribute directly to focal areas such as elimination of poverty, economic growth, infrastructure development, education and social inclusion, and also the protection of the natural world. And we've used globally taken up reference points such as the United Nations Sustainable Development Goals. Now, our industry sector and its stakeholders have the most apparent opportunity that we've had yet, and indeed the responsibility to help accelerate this further adjustment to action and practice for positive impact. But looking at the context of our conversation today, like Ramesh, you know, I work for a firm that's been established and is very heavily engaged as an intermediary in the Islamic capital markets. As an intermediary, we see a lot of flow and a lot of volume, but I've yet to see anything that's specifically targeting the blue economy. So, you know, I think this will be an interesting dialogue. I'm looking forward to Angelique. I'm looking forward to learning as much from my fellow panelists and from the questions and from the audience as I am to presenting to you today. So thank you.
Thank you, Stella, indeed. Kamal. we could get you to chime in now.
Hi, Vinita. Assalamu alaikum. Very good afternoon to everyone. First of all, again, thank you to WIEF for inviting me to participate in this event. Indeed, it's an honor. I guess the other speakers have talked about the blue economy. So I'll just make it short. I guess generally we are describing a sustainable development approach, to coastal and marine resources. And at the end, linking it to the UN Sustainable Development Goals, especially, I believe, SDG 6, which talks about clean water and sanitation, and SDG 14, which relates to life below water. But I guess the other aspects of it, which we should also take into account, that is also in line with the context of Islam, which is meeting the maqasid of Sharia, or the objectives of Sharia, which Stella has actually touched upon, and which aims to benefit and protect, the society at large and the ummah, which is through the preservation of religion, life, intellect, ancestry, and wealth. Now, under the current economic challenges, I guess a lot of countries are trying to diversify and fund their economies while developing it in a more sustainable manner in order to preserve their limited resources. And I think hence this forum is very relevant to what we are facing right now. And this includes Oman, which has also identified the fisheries economic sector as part of the diversification program. But then the next question is then, how do you fund the development of such alternatives or such activities? And hence Islamic finance and I believe fintech can play a major role, because one of the aspects of Islamic finance is able to provide a wider investor base. For example, through the issuance of SDG, ESG, or SR sukuk, whatever terminologies that you wish to call it, which provides an avenue for both conventional and also Sharia compliant investors. And in addition, using fintech as a funding mechanism, such as through, for example, crowdfunding, provides a wider reach to the masses and promotes financial inclusion. And that's one of the key aspects of a key component of Islamic finance in improving financial inclusion. I guess I'll go into this deeper later during the questions later on, Vinita. All right, thank you.
Okay, no problem, Kamal. Thank you. So each panelist has sort of touch point on what we would like to discuss today. We talk about execution challenge. We talk about the lack of investable instruments for Islamic investors, and also there's some examples about how fintech sort of fit into this journey. I would like to frame our discussion today based on a case study, and really, Angelique, this is where I pass to you, because Seychelles is the first government in the world to issue a blue bond. Really, what can you tell us about the government's experience in terms of structuring, promoting, and bringing this landmark deal to market?
Thank you very much. So with the issuance of the sovereign blue bond, I think it's always very important to acknowledge that financing doesn't just happen. There needs to be a signal to investors as to what your plans are. So one of the things that Seychelles invested in ahead of time was the development of a marine spatial plan. That was one, so a plan for your ocean space, as well as a blue economy roadmap. So what is it that you want to finance that ensures generation of wealth, alleviation of poverty, but at the same time, making sure that your ecosystems are healthy and being sustainably managed? It was only when we had put these pieces in order did the finance come. And I think this is one of the key lessons learned. It was very clear to the investors. They knew what they would be funding. And the other thing that's worth mentioning, because Ramesh and Stella talked about that, the KPIs, the key performance indicators. It is true that when you're structuring a financial deal, it is extremely easy to be very focused on the numbers, money in, money out. So that focus distracts you from the very notion why it's a blue bond, right? What is the sustainability around it? But what we have seen is that in order to realize the blue, in order to make the blue something tangible and concrete, it was the way in which the proceeds of the blue bond are administered. They are administered by locally managed intermediary on the ground. And it is those intermediaries intermediaries that work with the communities to make sure the funds are accessible, to make sure the funds are reaching the communities who they're intended to benefit, who are building the capacity of those communities to be able to access and manage those initiatives. And to also see how young entrepreneurs, for example, we have one example of what I will only call a fish fintech project, where you have an attempt to reduce fish wastage by connecting fishes to consumers, but using technology. So using an app to be able to say, I have fish available, and now the consumer can have access to, well, can pay for this fish and access the market. So these are like what I would call a fish fintech solution, because it was intended that the proceeds of the Blue Bond would be used for supporting that young entrepreneur, for helping that local fisher, and at the same time, everybody's able to generate some wealth and have some shared prosperity. This is just an example, but to share with you that the KPIs have to be developed together. They have to be developed together. One of the faults and lessons learned of the Blue Bond is the lack of co-design. Certain deals were structured without the inclusion of the, well, without, I wouldn't say necessarily the inclusion, but less thought was put towards how this would be implemented on the ground. More thought was done on, does the money come in? Can we pay the investor? What's the interest cost? Right? So not enough thought was put on how it would be implemented on the ground. And I think going forward, having those strategies well in advance can help you understand what interventions you need to do to ensure that this Blue Bond is in fact successful. And when I say successful, the measure of success being jointly agreed KPIs, that's both reflective of the aspiration on the ground as well as the financial deal.
Excellent. Thank you so much, Anjay. And I think that's a very, very good start and insight into the Blue Bond. I maybe want to scale back a little bit, Ramesh, really trying to first understand for the sake of our listeners and delegates here, when we talk about Blue Bond, we talk about Green Bond, there are so many, different frameworks available. Really, can you perhaps help us understand what sort of, are there any meaningful differences as far as these frameworks are concerned?
Thanks, Vinita. In my mind, the blue economy is part of the green economy, right? Whether the green's a subset of the blue or the blue's a subset of the green is not a debate I want to get into, but I think the audience here and us as panelists understand that correlation is very strong. When we talk about sustainability and the green, particularly green low carbon economy with efficient use of resources and social inclusion, which Angelique referred to earlier, we must not forget that more than 70% of our planet surface is covered by seas and oceans. Okay, so this is where the blue economy it comes into play, which considers the seas and oceans as drivers for growth, innovation, for sustainable, profitable development, economic development. It becomes relevant. So activities financed by blue sukuk financing falls squarely within the scope of, in my mind at least, of green project category, right? Namely those related to environmentally sustainable management of living natural resources. I think that's the right term. And then both terrestrial and aquatic biodiversity conservation, we look at that, and all the stuff we talk about, sustainable water, wastewater, waste management, as well as climate change adaptation. So blue sukuk, in my mind, should be aimed at promoting the implementation and achievement of the SDGs, SDG 14, that relates to conserving and sustainably using oceans and marine resources, and actions to combat climate change. Blue sukuk may also be seen as part of a specific ocean-centric effort used to finance broader sustainable blue economy strategies, and obviously can also emerge as part of a broader sustainable bond landscape, right? But at the end of the day, the framework, in my mind, is largely similar. Both, whether you're a green bond issuer, or a blue bond issuer, or sukuk rather than a bond, you face reputational risk and accusations of so-called greenwashing, or perhaps we call it blue washing, if proceeds are not used for the intended purpose, or if the issuers are unable to prove that the proceeds have funded projects with additionality, right? That's additional impact. And so I come back to my these comments we made earlier. I think Angelique made the comments about measurability and transparency. So it's almost not about a difference in framework. It's more about ensuring consistency of the ecosystem, allowing for the raising of capital where the risk can be identified and mitigated. So I hope that's sort of answers some of it.
Yes.
The bottom line is I don't see a difference in the framework.
Mm-hmm.
We still need the consistency of level playing field in terms of legislation, the rules of engagement. We need the common governance framework. So that doesn't change.
Absolutely. Stella, so Angelique and Ramesh touched upon several challenges in issuing a blue bond. Angelique mentioned we need a direction. So therefore, the blue economy roadmap was important. She talked about how the lack of co-design was a challenge in the first issuance. And then also there's the issue of blue washing. So as you know, Islamic finance practitioners, they face their own set of unique challenges, right? Because we are operating in a largely conventional interest-driven world. So what about when it comes to the sustainability agenda? Can you walk us through sort of the obstacles or challenges that Islamic financial institutions or governments face when it comes to adopting Islamic blue/green finance?
Sure. Within Islamic finance, Kamal touched on this as well. We've been deliberating for some time about how we move beyond Sharia compliance to consistently embody the requirements of Maqasid al-Sharia. And in terms of our sector's alignment to and delivery against national and international targets, one challenge I think has been in actually identifying where the focus of our industry initiative should be and whether we should approach our objectives individually as Islamic financial market firms and participants, collectively as industry stakeholders, or even collaboratively with those from other sustainable and responsible financial subsets. And since 2015, I've been a trustee of RFI Foundation, which has worked to explore that nexus between Sharia compliance and other responsible subsets. And it's important because selecting that critical point of entry to enable maximum impact from action has been quite a complex matter. I mentioned already that the SDGs have provided one point of focus. So the key tenets underlying Islamic finance, which differentiate it from conventional financial practices, actually provide us with quite a natural alignment to the SDGs and their targets. And SDG alignment also supports the tayyib or wholesome concept, which in turn substantiates the focus of Islamic financial products and services being for broader societal impact. But until recently, there has been relatively limited engagement by the global Islamic financial community with the SDGs, as well as with sustainable and ESG-focused finance more broadly, as Ramesh was pointing out. And even in our nascent green sukuk market, and that's what it is, but despite the fact it's really captured industry and media attention of late, the proportion of green to standard issuance is still far below that of the conventional market. And whilst there's growing demand for retail and SME-focused SDG-linked banking products, realignment of mainstream offerings via Sharia-compliant products or structures actually isn't really readily available, and certainly not across geographies. So some industry practitioners are claiming that lack of investor or shareholder demand amongst Islamic financial institutions has actually led to a low take-up of signatory organisations such as Principles for Responsible Banking and Principles for Responsible Investment by Islamic banks and financial institutions, or indeed by firms within OIC countries, because they're still very underrepresented. But recent net zero declarations aligned to COP26 agenda by Gulf countries, including the UAE, Saudi Arabia and Bahrain, could well trigger a significant change in strategic perspectives, and that could permeate through our financial sector. We know that in early October, the UAE became the first Persian Gulf petrostate to commit, setting targets for clean energy investment to align with net zero by 2050, and then Saudi and Bahrain have both since pledged net zero 2060. So if we take a historical view of calls to action, particularly within Islamic finance, top-down endorsement and interjection has really played its part in our development and expansion. We've really seen that in Malaysia. as has effective organisation around core industry infrastructure initiatives. And industry bodies like the IFSB, AOFI, SIBAFI, and IIFM, who are core for us, are undoubtedly strategising now to do more to develop relevant sustainability standards and infrastructure within their spheres of work, and to encourage cross-sector collaboration. It's really important, I think all will agree, that we engage and consider global approaches, but also we need to encourage adoption of standards by our own industry, by the wider market. So, having said this, I still haven't touched upon blue, and I notice I've spoken twice now and I haven't done that. I'm cognizant of it. And I mentioned already, as I was researching and preparing for today, I couldn't find an example of a purely Islamic financial sector transaction that identified and validated as blue, and Ramesh has been speaking about this. I did find a few hints within sustainability frameworks and taxonomies in development, but nothing explicit. But my own opinion is this is more a reflection of our sector's fairly recent attention to the broader greener sustainable agenda, and its needs still to do quite a lot to build industry consensus and to create the supporting infrastructure that's going to enable us to engage fully and effectively and maximise our contribution. So we've had to identify points of entry, we've had to explore the Sharia sustainable nexus, build awareness, innovate instruments, and think about standards and best practice that are dovetailing with global perspectives, but really important that they're specific to our very unique sector. And we're doing all of that at the same time. So common language, a consistent definition of what's blue, green, and sustainable is certainly needed, but isn't it by anybody? But in the meantime, let common sense and response to a crisis prevail. So personally, I see no reason, and I think Ramesh has touched on this, that we shouldn't transport the sustainability instruments that we're innovating, particularly in the capital market space, into blue. So there's definite opportunities for the green frameworks and taxonomies that are being created and evolving to be expanded, and similarly that frameworks evolving within major corporations and other private sector firms can take the same direction. In fact, this has got to be encouraged. You know, the SDGs that are relevant to water, 14 and 6, they have parity. We've been very focused on 15, on life on land, and ocean and marine sustainability. It has to be a principal preoccupation for many governments that are relevant to us because they have a key role to play in the ongoing development of our financial footprint too.
Excellent. So it seems to me that as an industry, when it comes to green finance, sustainable finance, we are sort of playing catch up. Kamal, I wonder if I could get you to sort of comment on what Stella and Ramesh has said. So one is the lack of engagement of the Islamic finance industry with SDG and the real need for a common governance, common framework, common taxonomy to support this sector. Really also, can you sort of expound on how regulators can support sustainable blue economies? Are there any concrete examples of measures or initiatives to support investment into blue economies or blue tech?
Well, I mean, if you look at, I can speak more on the GCC Oman perspective. Again, due to the current economic challenges based on COVID-19, oil prices have actually gone down. Of course, now it's actually recovered back again. You can see that most of the GCC economies or countries are trying to diversify the economy, especially away from the oil and gas sector. Again, due to, most countries are aware that these are all limited resources. And that includes Oman because 70% of revenues comes from oil. And to do this, most of the countries within the GCC areas have set up their own diversification program, and that includes Oman, which we call it Tanfid, which is a national program for enhancing economic diversification. And there are certain key focus areas. And one of the key focus areas is fisheries, which is quite relevant because Oman, being the second largest country in the GCC after Saudi, has a long coastline, along the Gulf of Oman and also the Indian Ocean. And fishery sector is a key focus area for further development in Oman. With that, at the same time, this program, which we call Tanfid, is looking at alternative financing as an enabler, for the sustainable development of the 5 key economic areas. And all these are also in line with Oman's Vision 2040, which is to promote sustainable development and financial inclusion. Now, to do all that, well, one of the things that Oman has actually done is, and in the areas of trying to actually encourage funding, we have actually come up, with the enhanced bonds and sukuk regulation, which embeds the new SRR framework, governance framework, which is actually there, meant for the issuance of, which includes everything from sustainable green bond or sukuk, blue bonds, social bonds, and and so forth, including wakaf sukuk. So all that is actually embedded. I think Ramesh touched on in terms of, I guess, the difference. Yes, as long as the core components of the framework is there, then I guess it's more on the utilization of the proceeds. That's where what's important. But as long as the same governance structure is there, then one can actually issue whether it's a green or a blue or even a social or sustainable bonds or sukuk. Now, this is being done again to provide funding not only for the government but also for corporates here, and hence one of the reasons why even the government here has actually come up with their own ESG framework in order to, with a target to actually issue more such instruments into the market, and at the same time to actually target a wider investor base. But bear in mind that at the same time, we, in order to develop this sector, especially when you talk about this ocean or marine resource sector, then you're talking about also the SMEs. And that's where there are a lot of companies, SMEs, actually involved in this sector, especially the fishery sector, which is actually being targeted. Now some of these small companies, may not be able to offer such sukuk or bonds because, again, they may not be enough. They are actually in a different life cycle or growth of the companies themselves. Hence, you need to actually then address the gaps between funding for such big companies through a blue bond or blue sukuk, and for such small companies like SMEs. And hence the reason why we've actually gone into crowdfunding. Perhaps I will go that a bit further when you're talking about the fintech aspects of it, but I'll stop at that for now, Binita.
Okay, no problem. Angelique, I would like to circle back to you if you have, if you would like to build on anything that our fellow colleagues have mentioned, and also really to get your perspective on COP26. Of course, it is the most important forum for climate change. Were there any developments which could benefit the blue finance agenda?
Yeah, no, thank you very much. So just to comment on what colleagues have said, I'm in complete agreement. I think the green framework is one that is worthy of being used similarly when applying to blue, or same application really. Just the focus, of course, is on marine resources. Now, if we turn to COP26, there's been a lot of signals. I think it was definitely the first time that, as Stella said, we saw so much private sector engagement, which was definitely a positive. But a signal that was very strong and something that has not been typical in the contentious presence of ocean. This is something that we've been pushing for a very long time. And it is only in 2021 that we saw this issue become something that many countries and different negotiating groups were agreeable to. So that's definitely a positive signal. It shows us that there's a need to breach those silos. Climate and ocean are not and should not be treated separately, small island. But it also makes the point about there's no need to necessarily make a strong distinction between green and blue, right? Similarly with climate and ocean, we're speaking very much about sustainability and much of the same. The other thing that I think is worth mentioning is if for the first time, although the term nature-based solution was very contentious, we did see the phrase blue carbon feature as a potential non-market approach. So although it has not reached the point of being reflected concretely as a potential markets a mechanism and approach, here looking at credits for seagrass or mangrove ecosystems, these are initiatives that are taking place on the ground, but we did see it reflected in the non-market approaches. So mechanisms where we could be looking at funding being channeled to them because of their inherent value. So these are really signals that's indicated to the markets that being there present at the COP, it became an amazing opportunity where impact investors, capital investors were able to engage with us to talk about their interest and potential investment in this blue carbon space. So for me, I think it was a very positive development. Obviously, we have to move cautiously. There's a lot of unknowns, but it's definitely been sending the right signals to the market.
That's great. Before I move to Ramesh, Stella, perhaps I could get you to talk about COP26. So I know you talked about it a little bit in your opening, but various commitments were made at COP26. How would this influence the Islamic sustainable agenda, if any?
I'd be happy to talk about it because it was, as Angelica said, it was a COP with difference. So in terms of influencing the Islamic agenda, as I've said already, it was deemed successful because it pushed the climate action agenda, but critics of the Glasgow Pact said it fell short of expected deliverables. And the wins that were included were the phase down of coal, the global methane pledge to cut methane emissions by 2030 by 30% from 2020, long-awaited finalisation of international rules for carbon trading, 110 nations committed to that, committing to ending deforestation and land degradation by 2030, and government commitments to countries' individual further review of nationally determined contributions to 2022 pledges, 2030 targets with a view to strengthening them. But on the matter of climate-related funding, the developed nations certainly did disappoint because they failed to meet in full earlier commitments to provide $100 billion to developing nations. So there's going to be much to do at COP 27 and before it. And we in Islamic finance are going to have our opportunity, I think, to build and deliver upon recent years of hard work and commitment shown to the agenda by the likes of the Islamic Development Bank. The Islamic Development Bank has undoubtedly been a beacon and a leader and a pathfinder amongst multilaterals during the past 2 years. It's been extraordinary, the work that's taken place, the funding that they've raised, the diversity of the projects, the frameworks that have been created. So COP26 Finance Day gave an opportunity for proactive discussion and debate. There were a wealth of sideline events, as Angelique will concur, organised and themed around perspectives and potential contributions of a very diverse set of global financial sector subsets, including our own. One of those was a half-day event organised by the Global Islamic Finance SDG Task Force, and that attracted contributions by His Excellency the President of the Islamic Development Bank, the Indonesian Minister of Finance, and our own UK Treasury's Economic Secretary, also the UNDP. So for those who aren't familiar with it, the Global Islamic Finance SDG Task Force is a unique collaboration between public and private sector. It's actually coordinated and steered by the UK Islamic Finance Council, but its founder stakeholders include the Islamic Development Bank and Her Majesty's Treasury, alongside numerous banks, financial sector firms, infrastructure organisations, also standard setters. And it's exploring the role that Islamic finance industry can play in closing the funding gap that needs to be addressed if the targets of the SDG are to be achieved within the envisaged timeline. So it's also seeking to identify the opportunities that the SDGs present for Islamic financial sector firms and economies. So, finding opportunities that are going to appeal to banks as well, because we are very overweighted to banks in our space, and it needs to be a sort of inclusive approach if we're going to have any chance of raising the levels of capital that we want. So the task force initially has been set to run until the end of 2022, and to facilitate an inclusive global approach, it's been meeting twice a year, various different national jurisdictions, It convenes to oversee the working groups that it runs and also to look at additional opportunities for cross-border development. And there are various working group meetings in between the main task force gatherings to focus on strategic themes of work, to increase awareness, promote understanding, even encourage adoption by members of the UN SDGs, and also really to facilitate sharing of knowledge and experience. So since its inception in 2020, I think the task force objectives, it's fair to say they've resonated with government and multilateral stakeholders, with Her Majesty's Treasury, as I said, and the Islamic Development Bank amongst them. But also it's resonated within other geographies, and the geographical footprint's really been expanding this year, perhaps in the lead into COP26. But if I give you an example, earlier this year, the State Bank of Pakistan announced a domestic chapter of the task force for its own marketplace. So perhaps no surprise that in an extension of this work, on the sidelines of COP26, at a meeting of the task force, Her Majesty's Treasury and the Islamic Development Bank were actually joined by the Ministry of Finance for Indonesia in announcing that a high-level working group had been formed as a 3-year initiative to keep green, blue, sustainable sukuk, the whole gamut, as I think has been described to me in another question, onto the agenda. And that focus is going to be there at each of the next 2 annual COP summits, which, as they're taking place in Egypt and the UAE, is very well aligned to what we're doing. And that work is really focusing on this very forward and upward trajectory that we're creating around the Islamic sustainable green blue capital market, and to try and accelerate the issuance of instruments there. So again, the group's going to be steered by the UK Islamic Finance Council, and the ultimate ambition is to help countries achieve their climate goals through the use of Islamic financing instruments, raise awareness, obviously, and expand what it's doing at the moment. Mm-hmm. So I think in summary, you know, that was pretty important. It's very important that we keep our own industry sector in focus. So this was on the sidelines of COP, but I think it ranked pari passu with the other sector events that were taking place at the same time. And it's important that we can stay connected to global initiatives to set standards, implement best practice, create sustainable taxonomies. But it's also important that we as an industry are well connected and we can operate within the confines of national and international legislation and regulation that's designed to work towards achieving targets and objectives. So, you know, we need that industry and stakeholder collaboration.
Mm-hmm. Absolutely, absolutely. Thank you, Stella. Ramesh, so maybe a bit more technical question, really. When it comes to structuring Islamic ESG products, specifically since we're talking about blue sukuk, could you walk us through the challenges and considerations that issuers need to take note of?
Thanks, Benita. I think the single most difficult aspect is one of defining the scope of application for the funds to be raised. All right. So in other words, how do we define blue activities and what constitutes a blue economy? We've already heard various comments over the last half an hour that there is some issue around just defining this space better. So, and it's not only about this definition, but then in a manner which allows us to remain Sharia compliant, right? In a manner that doesn't create too narrow a focus, again, where accusations of green or blue washing is an issue that inadvertently pops up. So, because we have we lack a clear universal standard or standards on what constitutes blue activities, it creates a bunch of issues, right? So we have some guidance from the UN and WWF, but in my view, they are insufficient to provide so technically the degree of clarity to enable the structuring of a financial instrument where the risks are clearly both understood and quantifiable. Because if it's understood, it's quantifiable, then you can look at mitigation strategies and all of that, right? So what we are seeing is a prevalence of projects that range from being too small, too complex. Often there's a lack of bias for the project. We've seen issues with the credit ratings of the issuers, you know, low credit ratings or credibility. Again, largely emanating from a lack of clarity and certainty. So the purpose of linking Islamic finance with blue sukuks should be aligned with the, and I think, Stella, you mentioned this earlier, the overarching ideology of Maqasid al-Sharia, which outlines the objectives to preserve and advance the common interests of society, also known as Sharia compliance. But we need more innovative Islamic financial instruments and institutions, and it was heartening to hear the comments about the Islamic Development Bank stepping up and being almost a beacon in this space, because that's absolutely what we need more of. Developing Islamic blue finance presents an opportunity for the Islamic finance industry to grow and merge with the increasingly popular socially responsible finance and ESG agendas. And it'll also better align Islamic finance with SDGs, right? Signaling the industry's commitment to environmental stewardship. So, yeah, so that's my take on it. You know, there are challenges. They're not very different from challenges in the green space. We have the added layer of trying to get something Sharia compliant, a space that's already not well defined, and so there's kind of two levels of issues here to deal with. And then it comes back into the heart of the matter is straight technical issues around structuring a financial product, risk, return, mitigating risk, that sort of thing. So that's
okay. Thank you, Ramesh. Kamal, so Ramesh mentioned the lack of clarity or certainty or lack of guidance. How do you ensure that doesn't happen when the CMA designs or engineers framework when it comes to, you know, ESG or blue or green?
Sorry, Vinita, was on mute. Interesting. Well, I guess one way is to ensure clarity is to put in whatever the objectives of what you intend to do in terms of the utilization for the instrument that you're actually raising clearly in the disclosure document, whether it's the prospectus or information memorandum, and then it's to be clear. Because just to digress a bit, I guess sometimes we have seen some of the bonds or sukuk instruments being issued worldwide. It may not qualify in certain aspects to be deemed as a blue or green sukuk. However, the utilization is meant on certain projects, which is actually covered under the eligible projects, you know, to be deemed as a green project or a blue project. The only thing is it may not have complied with the framework which has actually been set upon. But I guess both coming from investment banker point of view and also as a regulator, as long as you have clearly outlined the objectives in your document, your disclosure document, the objectives, the utilization, then I guess it does provide a certain clarity for investors then to to accept whether it's actually deemed as a blue or green sukuk, Nita. I mean, that's in a nutshell.
Absolutely. And Kamal, while I have you here, I want to direct the fintech questions to you. Really, what sort of initiative or innovations are we seeing from Islamic or Islamic fintech when it comes to ESG, blue, green? Can you elaborate on that?
Well, we've seen the bonds, the blue bonds, which has been issued in Seychelles, as what Angelique has mentioned. Yes, there are more sukuk issuances being issued, sustainable sukuk, social sukuk, which has been issued in other countries, including Malaysia. We have seen that, and it's good progress. Again, my thoughts were that, again, the target audience and the issuer which is actually doing this, are all probably sizable companies, which have a quite a long period of history, and they are actually at the highest stage of the growth, growth stage of the companies. Now we need to look at then how does Islamic fintech innovations help in this blue or sustainable finance sector. And that's where, as part of, especially in Oman, since we are looking at fisheries projects, sustainable fisheries projects, since that's one of the key sectors which have been identified. Now we need to see how we can actually target some of the smaller companies who may not be able to actually issue such big instruments, to institutional investors outside. Hence, the idea was that then we need to have some form of SME exchange or crowdfunding platforms in order to help some of these companies here. And there's actually quite a large base of SME companies which are involved in fisheries or marine source-based projects, especially here in Oman. And that's where we have actually come up with the new regulatory framework for crowdfunding, especially Islamic crowdfunding. We've gotten a lot of interest from some of the Islamic finance platform players coming into Oman and shifting from Dubai or Bahrain into Oman, because we've made it very flexible in the sense that it allows not only foreign investors to come into Oman, but allows any of the companies globally to raise their financing from Oman for projects outside of Oman. Hence, that's one of the reasons which was actually an attraction to quite a number of the global players. Now, we've done this in the sense that because at the end, crowdfunding is driven by fintech, and at the same time, it promotes financial inclusion, both from the issuer's point of view and also from the investors, and you are able to reach a wider mass, especially in terms of the investors. And as I mentioned earlier, improving financial inclusion is a key component of Islamic finance, and hence that's one of the reasons why we've actually launched this, tying in with the development of the blue economy, and hence at the same time trying to actually put Oman as a potential to be one of the leading crowdfunding hubs here in the GCC.
Thanks, Kamal. Angelique, I'm curious to know, because you briefly mentioned earlier that when it comes to fintech, Seychelles perhaps not as advanced. Could you perhaps elaborate more what really is the landscape like, and are there is the government or any authorities trying to move towards facilitating fintech for blue economy?
Yeah, thank you for that. So fintech is not off the ground in Seychelles. I think we've got a long way to go. The Central Bank of Seychelles has been the institution that has taken the lead on developing a fintech strategy for Seychelles. It's very clear that given we have challenges in Seychelles, connectivity is one of them. So just connectivity, speed of internet, amongst many connectivity challenges, means that this and obviously the diversity of products on offer has not been as advanced as we would like. There is a demand for it, but the central bank has sought to create a framework for it to sit in. Right, so that's where the strategy comes in. So I think there's still a long way to go. Its applicability in sort of moving us closer to blue is something that is yet to be seen. I gave an example earlier, on a very small scale of what it could look like, and very much, this is really where things like the sovereign blue bond assist with innovation, de-risking certain business ideas to test if it would be possible and scalable in the Seychelles, for example. So I think we're in short, we're somewhat a long way away for us seeing this really pick off at the moment, and sometimes it's just structural challenges more than the demand for it.
Yeah. All right, thanks, Angelique. Ramesh, I have a question that I want to ask you is, really realistically speaking, perhaps this is also a question for all the panelists, like, are there opportunities for blue sukuk in Asia or in the Middle East or in European region? Like, how will we actually see a blue sukuk? I believe it's my question.
Yeah, Yeah, no, thanks for that. I kind of think we've kind of answered all the bits that go into an answer, logical answer. The short answer is yes. The short answer is yes. The opportunities do exist. The oceans around us in Asia is not any different from the ones in the Pacific or whatever. The challenges, however, is around providing legal comfort to issuers, around issues of ownership, for example. How do you identify a slide? Because let me just go back a bit. A blue sukuk, is an equity instrument, right? So it's based on the underlying value of assets, unlike a bond, which is a debt instrument. So when you start talking about, a sukuk, a blue sukuk means you own a slice of the project, of the asset. How do you identify a slice of the ocean? How do you include a concept like that in a legal manner to support an underlying blue sukuk assets? What rights do you have? How do you sell it? How do you trade in it? How do you record it? How do you identify? And what are the risks that cannot be mitigated? And these are the risks that differentiate, I believe, a blue sukuk from a green sukuk. It's that concept that a sukuk brings, right? It's an asset-based thing. But overall, definitely the opportunities exist, because if you look at it from the perspective of a green sukuk, they're abundant and it's growing in strength, right? In terms of volume and the numbers we're talking about, and largely the rules and the framework around this is clear and increasingly clear. So it attracts capital. So what's going to hold us back, and I'm going to speak from an Asian perspective, what's going to hold us back is that we're not perhaps putting enough into R&D, into the technical assistance needed to develop these instruments, right? So that's a key thing. So the first blue bond was facilitated by the World Bank, right? Other development banks are currently working on similar bond structures, as I understand it. But if we're talking about a blue sukuk here, we need to invest in this, right? To raise capital to finance a regional project, in my mind at least, is difficult. To raise in a specific country and finance within the boundaries of that country, I say yes, plenty of opportunities. The problem we face is that most maritime resources and assets are government or crown owned, and this creates an inertia so often seen when you have public sector intervention, right? And then you've got cross boundary type issues. But if the question was, are there opportunities for Islamic financing in Asia? The answer is a resounding yes, absolutely resounding yes. And I'm just a fun fact perhaps, but take Malaysia as an example. Malaysia does lead the way in terms of Islamic financing. I've got some figures from 2019, where Malaysia recorded total Islamic banking assets of over close to $200 billion US. Right? And that's serious amount of value, money, capital tied up. So the short answer is, I'd say the answer is yes. We have a bit of homework to do. It's not impossible. We'll get there, but it needs real action. Right?
Thanks, Ramesh. So I know we are going to leave 15 minutes for Q&A, but I do see quite a number of questions that I think we deserve a bit of time. But before I go and go into the questions, I just wanted to again ask, Kamal, Stella, or Angelique, do you have anything else to add as far as the last question about opportunities? But perhaps instead of focusing on opportunities, really want to refocus the question on what are potentially setbacks from a blue sukuk to be issued. With no comments, I will open the floor to.
No, I've got a comment, if I may. I mean, in setback, and I think sort of Ramesh dealt with this pretty thoroughly. But again, I think it's a bit of a time and action. I mean, if we look right now, ESG factors three of the key considerations in mobilising capital sustainably and responsibly. So traditionally, one of the factors has been addressed within the objectives of a single financing or an investment, and that's the same, you know, in the mainstream space as well. So in developing financial instruments incorporating ESG considerations, until recently, the Islamic capital market has also taken a more siloed approach, with sukuk issuers also typically focusing on one of three ESG factors. But there's real momentum growing at the moment to develop products that are incorporating two or even three of them. And then the descriptor of the instrument, this nomenclature that we have to deal with the whole time, it changes to sustainable as ISDB being a beacon. You know, they brought the first sustainability sukuk in the amount of $1.5 billion, and then they came back to the market with $2.5 billion and their largest issuance. And they deployed those proceeds in accordance with the ISDB sustainability framework, which interconnects with the 19 UN-supported Sustainable Development Goals. Now, a lot of that deployment has related, obviously, in the last 2 years to social relief, to emergency, to crisis of a different type. So I think, and it's marvelous. We've got all the way through this session. I'm going to spoil it now. I mentioned COVID-19, but actually I think a lot of focus has been elsewhere. So maybe with COP26 and with the next two coming, we're going to refocus that a little bit. And, you know, transition is a big story as well. We are going to see a lot more traction, particularly out of the Middle East, through transition financing instruments that mean that you're not necessarily badged blue or green, but you're on a part of a very valuable journey, which is getting you to where you want to be ultimately. So I think there's going to be a lot of innovation there. So I don't think it's really stopping us, Benita. I think it's just a matter of what we can do to accelerate this. And the last thing that I'd touch on very quickly is that in terms of the blue, I think personal perspective is going to have a lot to play here. You know, when we're looking at fintech, when we're looking at crowdfunding, which has been mentioned a couple of times, it resonates with individuals. You know, people want to go out and they want to pick up plastic in the ocean, and they want to do their piece, and they want to look at conservation of wildlife, they want to look at clean oceans and so on. So that may be, it may be that actually blue resonates very specifically with private capital, philanthropic capital as well, which has been a little bit of a challenge for us. How do we blend finance? How do we bring that solid stream of private philanthropic capital to combine with these sort of public market instruments that we're evolving quite successfully? So I think that's the thing. It's a bit of a time delay. We've had many crises to deal with. This is a huge one we've got to address now, but we're coming off the back of another one. So I think it's all there. It's all there for us. We just have to work out what to do first and what we should use as our stepping stones to get there most quickly.
Sure, all about priority. Yeah. Okay, I think I would like to go to the questions from the audience if the panelists have no issue with it. All right, so one of the question is on this feature of co-design, which Angelique, you mentioned when it comes to blue investment, which must involve experts of the ocean, marine life. And this is a question by Joanne. So much is unknown regarding this massive and critical role of marine life in, you know, CO2 processing and climate change equation. So it's not simply about financial structuring. How do we ensure legitimate impact measures? And whoever who puts the stamp on compliance must also consider this.
Thanks. No, I think that's absolutely on point, that we need to push many of the finance people in sitting in boardrooms, many of them sitting in Washington, to think about co-design, to think about making sure that we're having ocean experts, people who understand marine biodiversity, people who understand ecosystem connectivity, and really understands impact measurement as it relates to these things. Without them in the room, it's very inevitable that you're going to create a structure that doesn't necessarily lead to the outcome you want. So you could be creating a financial deal. And again, the focus is very much on the KPIs, on the key performance indicators of the people in the room. What we need to find, this multidisciplinary, transdisciplinary, interdisciplinary approach that we need to take needs to happen But how it is done and how do we change the mindset of the people structuring these deals is going to be an important point for consideration. Because at the moment, there is a tendency to believe that the finance people in the room must know all the answers. And I think, what's often happened, and I'm a lawyer, so I use this example very frequently. When we were negotiating the Law of the Sea Convention, we let our treaty in the hands of lawyers. So we created all these fictitious maritime boundaries that ignores the connectivity between ecosystems and the movement of fish and the movement of marine mammals, because we didn't take all these expertise into consideration when drafting these legislation. And this is the lessons been learned, and this is something else. Seychelles has issued the first sovereign blue bond. There's been a lot of lessons learned. And I think it is for us to share transparently what those lessons are in order to ensure that the same maybe weaknesses are not reflected in instruments to come.
Thank you. On that note of transparency, there is a question about transparency. Transparency and professionalism, which is needed more when it comes to utilization of sukuk. And the question is addressed to any panelist member, perhaps really to elaborate on how do we keep the utilization of process of sukuk transparent, how do we keep people informed, and how do we maintain this sense of professionalism? Who would like to take this question? Maybe Kamal?
Yeah, sure, Benita. Later on, Ramesh, may also add in. Just trying to understand the question, utilization of Sukkot. So I guess it's the utilization of the proceeds.
The proceeds, yeah, I believe so.
On our side, as long as the disclosures have been made quite clearly, again, it depends on jurisdictions and how transparent the whole infrastructure is. I guess as long as the disclosures have been made clearly and in detail in the disclosure documents or information memorandum, I think that would actually provide that transparency. At the same time, depending on from country to country now, certain countries, when it comes to sukuk instruments, probably it's just traded through OTC counters. But there are certain countries which actually made it mandatory that it needs to be actually listed on the exchange and exchange traded. Countries like Indonesia, even in Oman. I guess Malaysia, a lot more is actually traded OTCs. The listing is more on profiling on the exchange itself. Although you do have a retail sukuk, which is actually exchange traded, for example, in Bursa Malaysia. But now, assuming if it's exchange traded, that provides additional transparency because there's usually a requirements for, especially in terms of listing requirements, that any form of, the utilization until the final utilization has been made, that needs to be disclosed, on the exchange itself. At the same time, on our side in Oman, we've made it an additional requirement, which is something extra, especially in terms of requiring that there should be an annual Sharia certification of the sukuk instrument itself, which is something extra but has been accepted, and that's something which is also being discussed by organizations as ILFI. So all this actually adds to the transparency and professionalism, of issuing the sukuk instrument.
Thanks, Kamal. Ramesh, would you like to build on that?
Maybe just a little bit in terms of the framework that Kamal's articulated, and he very correctly pointed out that perhaps it's an annual review or semi-annual review by a Sharia committee of some sort, and that's, I think, absolutely critical. And the governance framework, the independence of the committee is incredibly important. I mean, if you can imagine, you go out and raise $500 million for a project, and then some way along into the project, you become non-Sharia compliant or you're in breach, and the committee is put under pressure because the implications are so significant. And I think there needs to be safeguards around that, right? So if we're going to do it, if it's a Sharia compliant project, it's funded by a green or a blue sukuk, then we need to be honest with ourselves about that. And I think the other aspect is to take a very simplistic view of life, to say, I'm going to go out and issue 500 million bucks worth of green sukuk or blue sukuks, and the IM will tell you what I'm going to use it for, and away it goes. Is probably not realistic, because typically in the real world, you're drip feeding money into a project, whatever you call it, and along the way there's lots of different pathways, there's lots of different supply chains you're dealing with, and so forth. And it is an effort. It is an effort to stay the course and say, this will be Sharia compliant in accordance with the terms of the sukuk. And I think the work, the effort that needs to go into it upfront and continuing is significant. It is significant. It is not that you kind of chuck it across the fence to the Sharia committee and say, this is what we've done, you make a call, are we in compliance or not? I don't think it works that way. I think it works that there is a team, there is a management team, there is a management team that's focused on ensuring compliance with the terms of the sukuk, and ultimately the application of the funds. So it is complex, but it is necessary. It is necessary to ensure we meet all of those objectives of inclusiveness and doing good for the society and everything else under Masakedah Sharia.
Excellent, thanks, Ramesh.
Nita, could I just add one point that's just sprung to mind, and it's actually prompted by Ramesh, and I completely agree with everything that Kamal and Ramesh have said. Ramesh was talking about the importance of assets in Sharia compliant financial instruments, and along with the green-blue validation, well, certainly with the green validation, we've got independent firms that are looking at deployment, so Cicero, Sustainalytics, and the likes, climate bonds, and also we've been sort of following Sharia compliant adoption of global frameworks. But I think that one thing that is very important is to say that our instruments, it's not just about deployment of proceeds, actually. When you look at a sukuk instrument, the instrument itself, as Ramesh pointed out before, unlike in the conventional space, is actually supported with assets. So it's not just deployment into green or blue assets. You have an instrument that needs asset support in the first place to raise the investment to deploy. And that's a little bit of, I should probably have mentioned that before, it's a bit of a complexity for us, and perhaps has been a bit of a drag on creating the volume of capital, of asset-backed sukuks that are issued, because it's equally important from a Sharia perspective that those assets in the composition of the instrument itself are equally Sharia compliant. And of course, they have to be validated now in terms of a green or blue instrument to make sure that they comply from that perspective. So in this Sharia compliance space, we're looking at both sides. We're not just looking at deployment, we're looking at the origination and the composition of the instrument too.
Right. Thank you, Stella. So we have a question, well, two questions from Dawn. How does Islamic finance counter the issue in limitations of trading in sukuk products? So I think this is talking about the lack of trading of sukuk, lack of a secondary market. Who would like to take that question? Stella? Kamal? Ramesh?
I'm happy to pitch in if nobody else wants to, but otherwise I'll follow up.
Go ahead, Steph.
Yeah, how do we counter it? Well, we don't. And again, Ramesh has been speaking very knowledgeably about the issues that we have, particularly around the capital market space. Look, in terms of tradability, we need to look at the structure of the sukuk themselves, and to make sure that they are properly eligible for trade. And I think a lot of work has been done around that. So most of the instruments that are issued, particularly in the public market environment, are capable of trade. Quite a lot that are not, for Sharia compliant reasons, maybe stay in the private market and have different purpose and a different set of investor groups. In terms of the instruments themselves, we've sort of got two issues. We've got these very successful global sovereign sukuk issuance, and they tend to be highly rated, so investors are holding high quality liquid assets, and actually we've got a bit of an absence of that even now in our marketplace. So for investors that are compelled to be Sharia compliant, i.e. the Islamic banks, it's great to have a high rated, high quality liquid asset that is not only eligible for trading, but actually, and this links into Kamal, it's very helpful to have that there for your regulatory purposes as well, and to show that you have those high quality liquid assets in your liquidity buffers. So I think that has been an issue. Now the good news is, again, it's catch up. So we are seeing some quite interesting issues, particularly in the green space, and transitional approach seems to have resonated. So we've had all of these very sizable benchmark transition sukuk by the likes of GCC corporates. We've had Majid Al Futtaim, and we've had Etihad, and I think Apicorp's just set up its sustainability framework, which looks very well placed for transition financing as well. So I think by expanding our descriptors a little bit, making sure that there is more that is eligible to be financed in a Sharia compliant way, is going to accelerate our volume, and that's going to start to work towards making it possible to have enough volume that people are comfortable. If they trade out of one high quality liquid asset, they've actually got another one behind. So it's not a complete answer, but it's the answer to one aspect of where the blockage is in the sort of institutional market.
Yeah, can I add on?
Of course. Go ahead.
Yeah, just to add on to what Stella has mentioned, yeah, I think she's actually pointed out the key factors there, especially in terms of limitation of the papers itself being issued, especially high-grade papers. Yes, I think there needs to be more issuances in terms of the lower grade. There's the whole spectrum of credit which needs to be addressed along the credit spectrum. So the lower issued papers, perhaps that could actually add more liquidity to the market. But it adds on to the whole ecosystem. Most sukuk is actually one, especially as what Stella has mentioned, good grades are actually being held on by all the institutional investors, especially in the OTC market. Yes, you do see some trading, but in the OTC market, it's between institutional dealers and high net worth investors. The other aspect of it is trying to actually, because I'm just trying to look at the question in terms of trading. Then there's the other aspects of how you actually get more liquidity, especially when it's actually traded on the stock exchange itself, especially if it's a retail sukuk, which Malaysia has issued, and it's also actually being issued here in Oman, since everything is exchange traded. So it becomes a chicken and egg issue in the sense that you need more papers into the market. You are trying to have a bit more flexibility in terms of the structure, the standards being issued. For example, here in Oman, we've actually put it a bit more flexible in terms of the issuance of sukuk. There is no central Sharia body for them to actually comply with, as long as they are the respective Sharia boards of the respective issuer will actually issue their own fatwa. So that creates the innovation. So we will not bind them. So to create the innovation and flexibility for them to issue the papers, because at the end, you are the ones who's actually selling and targeting the investors. So we created a bit more flexibility, and in a way that helped to actually address the growth of the sukuk issuance here in Oman. For example, we've only started 7 years back. And now I think in terms of sukuk, that actually consists about 20% of the fixed income market. And most of it is actually exchange traded. Yes, we do have problems in trying to enhance liquidity, but that's something else that we need to look at, whether to increase, market making, securities borrowing or lending, increasing the funds who's actually investing inside fixed income instruments. So there's a lot of factors that comes into play. And well, that's a problem where a lot of countries are still facing, especially when it comes to the retail space.
Right. Thank you, Kamal and Stella. So we'll move on to the next question by Saleh. Can the panelists share their insights on making green sukuk available for the private sector to finance renewable energy projects, among other infrastructure and sustainability projects? Ramesh?
Yeah, I don't see why not. It's the short answer. I just it's an instrument to raise capital, a renewable energy project that fits all of the criteria in terms of Sharia compliance, and then clearly from my perspective the ESG side of things. And if I can map the project to some of the SDGs, and and I can stand back and look at it from a real world perspective and say this is good for the planet and there's additionality, and I would have thought I would have no shortage of investors in any form of instrument, whether it's a bond, it's a blue sukuk, green sukuk, So I unless I've understood the question wrongly, I think the answer is there should be no problem in structuring a green sukuk or a renewable energy project that complies with all of the requirements.
Excellent. I'm just checking, is Angelique, are you back online? Okay, good, because we do have a question for you by Dawn. And Dawn asks, what would you say are the enabling factors for the success of the world's first sovereign blue bond in Seychelles? And how did the World Bank and policymakers play a part in its success?
No, thanks for that. So in terms of success of the blue bond, I think I mentioned it at the beginning, having the marine spatial plan, having the blue economy roadmap, having the plans, and then the financing. But I think it's interesting to think about what is the success, right? Because of course we haven't come to the close of the blue bond. I think there's still a lot for us to do and achieve before we can really measure its success. On the face of it at the moment, what we have been able to see is that at least there's been we've been able to see how young entrepreneurs have started businesses, livelihoods are being generated for women. So we've been able to see anecdotal impact. I think there's a more long-term view of where things are going. The part about policymakers and the World Bank. So the World Bank came in on this deal to reduce interest costs. Of course, the interest was quite high, issuance of a bond by a government in a developing country. So interest costs were high. And in order to reduce risk, we were able to get the partial guarantee from the World Bank, as well as the concessionary loan from the Global Environment Facility. But at the same time, this is a blended finance deal, right? So we were able to see governments leverage public funds and public security of these deals to be able to attract private capital. And I think that's where we need to see government. We also need to make sure that there are regulations and legislation in place to ensure that the investments that we are attracting are ones that the landscape is attractive to private investments, but also good for the countries that are attracting these investments. Thank you.
Thank you. Excellent. I think we have time for one more question before I will get the panelists to wrap up. And this question would be for Kamal, because Mohammed wants to know, in your experience with regards to sustainability bonds and sukuk, how has the investor participation been from GCC countries?
Well, okay. Since the question talks about sustainability bonds or sukuk, I think there's always there has been. I think that the demand is there, especially from those investors having an ESG or SDG mandates here. So you're not talking only about Sharia compliant mandates from investors, but also those could be conventional space having an ESG or SDG mandates. So the demand has always been there, and you've seen good subscription rates coming from the GCC, especially when there are not many yet, and I think the take up of these instruments are actually quite well. But I just wanted to also add with in relation to, because to digress a bit also on the fintech space, when we were approached by a few of these players coming in from Dubai or Bahrain wanting to come into Oman and actually provide some form of P2P platform, which includes an issuance of short-term sukuk or including Islamic investment notes, and some of them are to actually raise funding for some of these small companies or SMEs involved in the blue economy. It was quite interesting where they are looking at because there is a huge demand for Sharia compliant instruments even through a crowdfunding platform, and two, they are actually using blockchain technology in actually tokenizing sukuk into smaller pieces and to create it more transparent for some of these fundraising projects. So it's quite interesting in the fintech space where you're actually trying to issue an instrument or an asset class such as a sukuk, which is a more short-term, tokenizing it into smaller pieces and using blockchain technology to actually reach the masses and the society for those who are interested, because it could be either through a P2P or it could even be a donation-based crowdfunding platform. So there's always that interest, and we feel that, and we've seen that there's always interest in some of these investors with such mandates wanting to invest in such instruments.
Excellent. All right, so I've been told that I have time for one more last question before we wrap up. It's by Zuriani. She asks, what is the difference between Sharia compliant against simply good corporate governance? Which is a very good question. Who would like to take this? The difference between Sharia compliant and good corporate governance. Stella?
I'm just trying to unmute here. Okay, what is the difference? I guess it depends upon perspectives, because certainly Sharia compliance can be quite prescriptive in its approach. And one thing that we do know in our sector, and sometimes I fight back a little bit because I'm always hearing about we screen negatively rather than positively, and I don't quite understand that, because I think we do screen in the Sharia compliant industry, but actually it's a positive effect at the end of the day because we take out things that are inappropriate. And I think that prescription that we have in our processes actually appeals really well with other sustainable, responsible subsets, because we've talked about, identification and classification and working out where we're going and what we should actually call things. This is not unique to us in Islamic finance. It's there across the whole of the sustainable, responsible environment. We're all working on definitions and descriptions and how we should classify things from a regulatory and legal perspective. So it is undoubtedly different. We have a different, we need to take faith-focused input, which we do through our Sharia supervisory boards that we may hold individually, or we may look at national level to hire Sharia supervisory authorities. But what is interesting right now, through their consideration of Maqasid al-Sharia, is how those Sharia scholars are looking at the sustainability initiative as something distinct within the normal remit of their Sharia consideration. So that's quite important. On our Sharia board, we have 5 members, and they are all absolutely fantastic, very proactive. But one, Dr. Mohammed Akram Laldin, who resides in Malaysia, is actually our sustainability champion as well. So he leads in terms of the other scholars in actually introducing things into our Sharia dialogue that are very specifically relevant to developing standards and practice and so on for ESG. So there is, there's a lot of parallels, there's a lot of crossover here, but in terms of where I'd leave this, I would say that it certainly is another post of governance within any firm that is looking at Sharia compliant practices, whether they are fully Sharia compliant themselves. Actually, the best way, in my opinion, to incorporate this is within the main body of an approach to governance. So you bring in your sustainability, you bring in your Sharia application as well. And it can all be managed from a central point. So I do agree that it's an absolute anchor of governance and compliance within an organisation, but it is distinct in the way it needs to be reviewed and validated.
Excellent. So on that note, I would like to get each of our panelists to wrap up or tell the audience, tell me what are your key takeaways from our 90-minute discussion. Maybe we can start with Ramesh first.
Thanks, Vanita. Just very quickly, I think we've all kind of gravitated around the same issues around a lack of or the potential for more clarity around defining what the blue economy is, blue activities are. I think that's a big piece. And then, I think the challenges that go with designing a blue sukuk, given it's an asset-based instrument, it's kind of chicken or the egg sort of thing, right? So Stella mentioned that earlier. So that's another challenge. And then the need for some technical input into developing new products, right? So someone's got to stump up the money, the resources to say, we'll put some research and development into developing some new instruments, including getting into the fintech space. So I think that's kind of my three key takeaways. Yeah.
Excellent. Thanks, Ramesh. Angelique?
On my side, I'd say the main takeaway was we have an opportunity to move away from business as usual. There's an opportunity to do things differently, and we should take it, and we shouldn't be fearful of some unknowns, some uncertainties. Oftentimes, if we wait until we know all the answers, we'll never move. So that's definitely my takeaway from all of this.
Thanks, Angelique. Stella?
Trying to keep it brief because it's difficult. And by the way, I've actually seen some great questions in the chat line, which I think didn't find their way into the Q&A box. But I think the panelists have dealt with some of those coming across this. But innovative Islamic financial instruments, including sukuk, and we've discussed those at length, they're really well placed to mobilize finance for green and blue projects, and particularly with the Islamic capital market that's providing this wider opportunity now for global engagement and broader capital raising. One of the questions that came up in the Q&A is, well, if Islamic green is nascent, why go to Islamic blue? Well, I would say to you, and you'll need to go off and refer if you're not familiar with the issuances afterwards, ask government of Indonesia with their inaugural sovereign green, which was a first on all sorts of levels, but it's about diversification. It's about bringing in new investor groups. And what I do think is that actually Sharia compliance is not a deterrent to investors that don't need necessarily to be Sharia compliant. I am a big fan of making sure that those that do have the access to the instruments, but actually it's about diversification as well. Fintech, two types of fintech. I didn't have time to talk about that today, but I would have liked to. My firm has built capabilities for enablement of into its fintech. So we're really around enabling the capital markets and the liquidity space, and we've looked at green screen, and we'll look at blue and when that is relevant to us and to our client base as well. And it's really important because those sorts of tech are enhancing cross-border distribution capability. The disruptors are really exciting in our space at the moment. We talked a little bit about crowdfunding. Our fintech's nascent. It is jumping into disruptive capital raising that I think has ratcheted up a couple of levels this year. There's been some quite sizable rounds. Now, what I would say is a lot of our Islamic fintech entrepreneurs are younger than me. Everybody's younger than me, but they certainly are. And they are very focused on a sustainable, responsible approach. And they are great at matching up their business commercial aspiration with what they believe to be responsible and ethical and so on. So in summary, one sentence, let's play to our undoubted inherent industry strengths. We can do this. We're so well placed for it, and we can commit fully to the cause.
Excellent. Thank you so much, Stella. And Kamal, the floor is yours.
Well, I think the other three speakers have actually summed up nicely the whole talking about, diving into deep blues, and possibilities for Islamic finance. I guess I just wanted to add that because we didn't dwell too much, we did, but not more deeply into the Islamic fintech space. I see there's tremendous potential there. Yes, we've seen a lot of sukuk issuances now going to, of course, all types of sukuk issuances relating to green, blue, or sustainable, and social bonds and sukuk into the Islamic finance space. But I think the opportunity and how we actually want to increase or enhance financial inclusion, and that's where Islamic fintech plays a major role in this. And hopefully we can actually see more issuances from that, which relates more to the blue economy. inshallah.
Yes. Indeed, we didn't manage to talk, to dive deeper into certain topics that was most interesting to our discussion today. I think 60 minutes is just not enough. It's such a broad and exciting area for us. I'd just like to take this opportunity to thank, Kamal, Stella, Ramesh, and Angelique for joining us and for sharing your insights. It's so interesting because I see all the questions. There are still people typing in the chat box, so who wants to connect with our panelists. Thank you so much for your insights, and I am now pleased to pass it on to the MC.
Thank you. Thank you all to our distinguished guests for being here today and making this webinar successful. Now, thank you to all. Unfortunately, that is all the time we have for today. We truly hope that you've gained valuable inputs and ideas. Now, on behalf of WIEF Foundation, thank you for joining us today. Stay safe and have a great day ahead.